FA1 Part B. Recording and Accounting for Cash Transactions. Chapter 8. Authorizing and Making Payments. The topics that this presentation will cover are 1. Controls over payment. 2. Check requisition forms. 3. Expenses claim forms. 4. The timing and methods of payment. 5. Payments by cash. 6. Payments by check. 7. Bank giro credits, credit transfers. 8. Payments by banker's draft, payable order. 9. Payments by standing order and direct order. 10. Documentation to go out with payments. 1. The controls over payments need to be strict. If any employee were allowed to make payments without permission, then there would be a lot of cheating and dishonesty occurring. There are 3 main steps in applying control over payments. Step 1. Documentation, receiving the documentary evidence of why the payment needs to be made, for example, an invoice, statement, check request form, or expense claim form. Step 2. Authorization of the payment, which means giving the formal official approval to make the payment. Step 3. Restricting the authority to make the payment to only certain individuals by means of authorized signatures for checks, and payment instructions to the bank. There needs to be a proper authorization procedure, so that payments can be approved by a person in authority. Every payment needs to be approved by an authorized person. Each authorized person will have their own written limits, which is the maximum amount that they can authorize for. When a payment is authorized, the authorizing person should put their signature or recognizable initials, and the date on the appropriate document, as proof of authorization. If there is no signature or initials on the document, then the accounts department should refuse to make the payment. A check requisition form is a form requesting that a check be drawn. They help to ensure authorization and the recording of payments. It is used when an invoice will not be received or the invoice will follow later, but the payment is needed now. For an example of a check requisition form and how to prepare a check requisition form, see page 171 of your interactive text study guide. 3. An expenses claim form is used when employees pay for business expenses out of their own pocket and then claim it back from the business. Examples of expenses that an employee may claim are business travel, newspapers or magazines for business use, petrol, telephone bill, either part or all of it, and car service and repair bills. This is the procedure to follow when dealing with an expense claim form. Step 1. The employee will complete and sign the expense claim form, and then submit it for approval and authorization. Step 2. All the relevant receipts, bills, invoices, should be attached to the expense claim form. Step 3. The general ledger codes will be put on the form after submission to the accounts department for payment. Step 4. The separation of payment into the net amount and the sales tax might be done by the accounts department, or the person making the claim. 4. A business will use a variety of different methods of payments, and each method has its own timing. Suppliers will give their customers a period of credit, which means they will allow a customer a certain amount of days, 30, 60, 90 days, to pay, or they will specify a date by which the payment will need to be made by. If the invoice is not paid by that date, then the invoice amount becomes overdue, and the customer may receive reminders and telephone calls about payment. Miscellaneous payments are usually paid when they are due, and trade bills are usually paid at the end of the month, but a senior person in the company should decide who should be paid, and when they are paid. The methods that a business uses to make payments are the same as the methods used to receive payments. The methods a business would more commonly use are automatic transfers, internet payments, EFT, and checks. The other methods of payment are cash, banker's draft, standing order, direct debit, company credit card, mail transfer and telegraphic transfer. 5. Cash is usually used for small payments out of petty cash, and occasionally for wages. Cash is rarely used to pay large amounts because cash needs to be secure, as it is easily stolen. It can get lost in the post. It will be difficult to keep control over cash, if it is often used to make payments. If you pay a supplier with cash, unless the supplier gives you a receipt, there will be no record of the payment. 6. The use of checks are becoming rare due to the increase in the use of debit and credit cards and the increase in fraud on checks. See the video lecture called Chapter 8 on checks for more information on checks. When using checks, you need to know the following: preparing checks for payment, dealing with lost checks, and stopping checks. A bank mandate form is a list of names and sample signatures of people that are allowed to sign on a check on behalf of a company. This list is supplied to the bank by the company. In many cases, if the check is above a certain amount, then there needs to be 2 authorized signatures on the check. Preparing checks: by crossing a check and marking account payee only, not negotiable, you are making sure that no one but the payee can claim the payment off the check. For the procedure on preparing a check, see page 174 and 175 of your interactive text study guide. Dealing with lost checks, see page 176 and 177 of your interactive text study guide. Stopping checks, see page 177 and 178 of your interactive text study guide. 7. When making a payment with a bank giro credit transfer, the person making the payment will fill in a bank giro credit transfer form, and hand it together with the payment, cash or check, over the counter at the bank. The bank may charge a fee for this service. Banks find that there are often problems when bills are paid in with bank giro credits, because the form for the bank giro is often filled in wrong. That is why they try and issue pre-printed giro forms whenever possible. In practice, the use of bank giro credits by businesses are rare. 8. A banker's draft cannot be stopped or cancelled after it is issued, so when someone receives a banker's draft, they know that the payment is guaranteed. It is normally used for large payments, like buying a company car. To see an example of a payment by banker's draft, see page 180 and 181 of your interactive text study guide. 9. A standing order is a regular payment of a fixed amount. The business needs to ask the bank to set up a standing order. A business needs to tell the bank that it would like a standing order arrangement for regular payments, and that each payment will have a fixed amount. The business would need to specify to the bank the amount, frequency, and due date of the standing order, and give the bank the banking details of the supplier to which the payments are being made. If the business needs to alter the amount of the stop order or stop the payment, it must notify the bank in writing. A direct order is a regular payment. It differs from a standing order in that the amount of a direct debit is varied, and that the receiver of the payment is the person to ask the bank to set up the direct debit. Stop the lecture. Answer the question on page 183 of your interactive text study guide. 10. A business should send explanatory documentation with any payment, so that it will avoid confusion in its allocation. The documentation used may be any of the following: a remittance advice, an order form, a copy of a pro forma invoice, a bank giro credit form, or a covering letter explaining what the payment is for, if no other type of documentation exists to explain the payment. This is the end of Chapter 8. What will follow next is the quick quiz. After the quick quiz, do the online questions for Part B, Chapter 8. It will be good practice because the online questions are set out like the exam that you do at the end of the course. They will also test your knowledge of this chapter. Quick quiz. Question 1. What are the 3 main steps in applying controls over payments? Question 2. When might documentary evidence not be available for a payment? Question 3. What is a check requisition form? Question 4. What is an expenses claim form used for, and by whom? Question 5. Which methods of payment are most commonly used by businesses? Question 6. Should cash be sent by post? Question 7. What should you do to stop a check? Question 8. What is the main difference between a standing order and a direct debit? Question 9. What is the document most usually sent with a payment by a business? After doing the quick quiz, do the online questions for Part B, Chapter 8. Do the questions, until you achieve 80%. Replay the lecture as needed.